We are very well aware that investing in equity poses high risk, but at the same time, it can generate much higher returns. We have our industry expert Mr. Gurraj with us. Gurraj, please explain us about when is equity investment beneficial and what are the different categories of equity investment we can invest in.
So when you come into the debt and equity funds, we need to understand what is the risk, right? So the least risk among all the debt funds is what we call it as overnight fund, then the liquid funds, then the ultra short term, short term. These are the various categories of debt funds. Similarly, these are the various categories of equity funds. These are the categories which are there in equity. For example, if I say equity, I have a flexi cap fund, I have a multi cap, I have a large cap, large and mid cap, small cap, dividend yield. So many funds are there. Now, quickly let us run through. The first thing I need to be clear, what is the return I'm expecting, right? For example, if I'm expecting bus, I'm happy if I get a kind of 10% return, right? If that is my objective, then I'm taking less risk, right? I'm not very bullish. Then what I will do, either I may go for a large cap fund or I might go for a flexi cap fund, right? Now, what is the difference between these two, large cap and flexi cap? Flexi cap will have at least 65% to 70% large cap, and the balance could be small cap and mid cap, right? Whereas a pure large cap fund is 100, I mean, or rather 80% in large cap and maybe 10-15% in your small and mid cap. Normally they will be in mid cap, but sometimes they can also take small cap. Now, this is what. So when you are more into large cap, your risk is less, right? Flexi cap also gives you that cushion, 65% to 70% it will be in large cap, only 30%. So today, what is happening is if I don't want to take too much of risk, either I will go for a large cap fund or I will go for a flexi cap fund, right? But on the contrary, if I am expecting 11 to 12%, then my large cap and flexi cap may not be able to give me that return. So I go to the next category, which is the multi cap. Right? So in multi cap, what happens is I will have to necessarily invest 25% in large cap, 25% in a mid cap, and 25% in a small cap, and balance 25 can go anywhere. So from purely a large cap and flexi cap, multi cap is slightly more riskier. Why I am taking that risk? Because I have time with me and I want at least more than 10% rate. That is my logic for going for a multi cap. So please understand this. You don't want to take enough risk. I may be happy with a large cap and a flexi cap. But if I want to take some risk because I have longer period, that's where we say if you are looking at anywhere between 6 and 10 years, then better you invest in large cap and flexi cap. But if you have 10 years of time horizon, say for example, somebody is planning for a retirement fund, right? I might opt for a multi-cap fund rather than a flexi-cap fund or a large cap because I say was I have 20, 25 years. So when I say this, I will opt for a multi-cap fund because I have more than 10 years. Somebody might come and say, was then why not invest in a small cap? So I will only say that don't take that kind of risk because already this multi-cap portfolio has a 25% exposure to small cap. So why should I have more than 25% exposure to small cap? So I will not go for a pure small cap fund. I would always prefer a multi cap fund. So this is how I choose the category. Dividend yield and all will do well in a particular market, especially when markets are down. Dividend yield funds will do well. Focus fund means it is more concentrated portfolio, only 30 stocks. So I may not prefer that, right? So for me, when I'm building an investment portfolio, I will restrict myself to two, three categories. What are those two, three categories? One, probably I may invest in a large cap. The next best is I may invest in a flexi cap. The last one, when I have a lot of time, I am comfortable investing in a multi cap fund. Right now, this could be one basic approach when you're investing. Some people might think, boss, why not index funds? Why you are telling me large cap? I'll invest in an index fund. Please do it. I will never say that you don't do it. Of course, expenses would be less, but sometimes what happens is these active funds will do better than your these index funds, right? Sometimes I'm not saying every time it will do, sometimes. So it is better to have a allocation, maybe some portion in index funds and some portion in a large cap fund. At least I'll have a 50-50 if I don't want to take much of a risk. Right? But for me, my portfolio will be good enough if I have these 3 4 categories: one index fund, one large cap, one flexi cap, one multi cap. That's it. Now, what you will also face in reality, somewhere you will come and say, boss, during Corona time especially, right? People will say, boss, now all pharma companies will make lot of money. Then you will immediately go and search which are the pharma funds which is available in the market. Oh, this might do well. Let me go and put some money. Those kind of calls, tactical calls we call, I don't know, unless you are capable, don't do it. Unless you are capable of understanding that sector well, you are able, because very important to time your entry and exit in these sectoral funds. Say for example, somebody who had invested in pharma fund in 2020 will be regretting today because they are not doing well now. Maybe 1 or 2 years it gave good return, but after that it is now down. Today talk of the town is IT sector, because IT sector has been hit badly, right? Now people will think good time to buy IT sector funds, so why not invest in IT sector? All this will be happening, right? So just keep yourself away from all these noises. What you should do as an investor is keep it simple, look at 2 3 categories and do a disciplined investment that averaging itself will give you a decent return. So to me, if you ask me, just hold on to these 3 4 categories and diversify among that also. For example, if you are going to do a 25,000 SIP in a large cap fund, I may not put all that 25,000 in one large cap fund of a one mutual fund. Maybe I will select 2 3 large cap funds of different mutual funds to diversify. Here also, you should check with your advisor what is the overlap in the portfolio. There is a software tool, even it is free of cost, it is available. It will tell you whether both the portfolios are having good diversification. So I will check with my advisor on the overlap portfolio. I will do that. So if my amount is big, right? If the amount is only 2 or 3 thousand, maybe I can still continue with one category in a particular mutual fund. Yeah, so these are some of the things which I have to do it when I'm selecting a equity category. Yeah. So as I mentioned earlier, how do we decide whether it is a large cap or not? Based on the market capitalization, the top 100 companies are called as large cap. This is defined by our regulator, and AMFI ensures that all the mutual fund follows this classification. So today, that's where it will be a lot of commonness. I have to look at only these 100 stocks when I'm building a large cap portfolio. I cannot get out of this 100. Yeah. Similarly, when I'm building portfolio for mid cap, I have to only select this 101 to 250. My small cap is anything about 251. This is how small cap and mid cap and large cap are defined in by the regulator. I have to follow this. And there is another category which is very good, which I feel everybody should own it. If you are in this, I mean, what do you call, you want to take this ATC benefit of 1.5 lakhs, right? At some stage in life, you might be already exhausting that 1.5 lakhs for your housing loan, tuition fee, and PF contribution, and all that. So long as you are not overshot that 1.5 lakhs, I feel some part of your money, especially if somebody has joined recently, taken up a job, the best thing to do is start a SIP in a ELSS category. I mean, I will give the, I mean, topmost preference for 2 or 3 reasons. One is you get this ATC benefit, which is a no-brainer, right? Second is, well, these are very well diversified funds across sectors. Third benefit is because of the 3 year lock-in, fund manager has a better managing capacity because money will not go out. Last thing we should always keep it in mind is, as I said, equity you come for 10 years, not for 3 years. People have this misconception thinking that was after 3 years I can withdraw the money or I can stop. Please don't do it. You are saving for a particular goal. If your goal is for 3 years, you will never come to equity. So this I will consider my, I mean, me to be a retirement fund also. You just keep investing in this ELSS category till your retirement. I can assure you will create a very good corpus, because very well diversified fund. You, each one of us should have hold this ELSS category. unless you are exhausting that 1.5 lakhs, right? When it comes to that 1.5 lakhs, I somehow feel many of you might go and pick up those insurance policies and all. I don't think insurance is for tax benefit. Insurance is for life protection. So my term policy is good enough for it. So I will not go and buy some other insurance policy just because I'm getting ATC benefit. But please don't do that mistake. Separate investment from insurance. Be clear about it. Right? Then these are various styles which are offered: value, contra fund. All that mean at a particular point in time it is okay. But for me, the broader categories are one index fund, one large cap, one flexi cap, one multi cap. That's it. I'm done. This is more than enough to achieve my goals. I'll not even look at any other category except this three, four. Good enough to, and of course, the ELSS is always there, right? So that is the way I will look at my equity categories.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.